If you're on the Titanic and you think you're unsinkable, you're more likely to hit an iceberg. Whereas if you're on the Titanic and you still want to be looking out for icebergs, you still want to identify things that could conceivably mess up your ship, or at least delay your course or something like that. And so it is useful to be on the lookout for all the different risks that can happen. When a smaller country bans it, or even a large country that doesn't have a lot of financial weight, like for example, Nigeria is a very large country. They've banned it from their financial system at least. But the United States and Europe are the two kind of 800-pound gorillas that could at least for a period of time probably affect price notably if they were to ban it. And it's worth there's a couple different types of ban. So one, it's really hard to have any sort of enforceable ban where you say people are just not allowed to own it under penalty of jail, right? So they did that. I mean, the Americans did that for gold for like 40 years, from the mid 1930s to the mid 1970s. It's kind of remarkable, the land of the free, and you literally couldn't own a benign metal, just a yellow metal. And so you could conceivably have one of those for Bitcoin, but it's harder, right? Because it's hard to prove someone has it. If you are required to turn it in, you could just, you could destroy your hardware wallet, for example. And how do they know whether or not you have a backup? They've seen that that's not a clean way to go. And so the easier way for them to do it is to say, okay, we're not going to go after the consumer level to say you can't own it, and we're not going to try to enforce that. Instead, we're going to sever it from our banking system and ban industrial scale mining. So what that does is you basically go after the fiat on-ramps, right? So you go after a handful of major companies. Those are easier to track, easier to stop, very easy to enforce. And then also any sort of large mining operations you can generally identify, and cut them off. It's really hard to ban on the consumer level, even harder than gold, I would argue. You're essentially banning math or encryption or the ability to memorize a number in your head. Hard to prove someone has it. Um, and so it's really my view about the fiat on ramps and the institutions and those large pools of capital that are, if you want to see number go up, right, then and market cap go up, eventually those large pools of capital have to get into it. And so if they're severed from doing it, that can slow down adoption, unless things get bad enough that it's a crisis of confidence and people flock to it. So it's kind of like it could slow it, but it also could be a sign that things really are going well with the currency. If you were to see those major rule of law countries kind of ban that. They're running distributed software to come to a consensus on a blockchain. And so if there are bugs that interfere with our ability to do that, it can threaten kind of the obviously the near term functioning while it's happening, but then longer term it can affect the perception of safety, and its usefulness as money, if you were to get major ones of those or too many of those. And especially as you're building out what many people view as eventually being like a global reserve currency, a currency based on energy, this international store of value medium of exchange, you want that to be as rock solid as possible and not to have things kind of hurt the brand. They use extremely sophisticated methods to protect that, and so that the risk is very low. But yeah, if something like a Fidelity or a Coinbase just was like depleted of its coins, that would be like you point out, that wouldn't kill Bitcoin, but that could slow adoption. And so it's one of those things where if you look at, I believe Grayscale uses Coinbase custody, right? So it's a very, there's a very large amount of people, for example, reliant on a handful of these centralized institutions to hold their coins. And so obviously the one defense against that is to hold your own keys. But not everybody is technically suitable for that, right? So if my mom were to buy Bitcoin, she's probably not going to set up a multi-signature solution, have metal backups. She's going to just hold it with some institution that she trusts, kind of like her bank. And so there is a market for that. It's an important market for custodians. And so we want the user interface to be attractive. We want it to be easily accessible, so that that's part of what makes adoption go higher. You would shake people's confidence. You would bring on regulators probably if you were to have one of these enormous kind of whale institutions go down. And so it is something to be aware of, because you could wake up one morning and just see the price down 20% because some crazy thing happened like that. part of why Bitcoin's network effect is so strong is because it has the highest security. And then the more adoption it attracts, the stronger that security gets. And so basically, with any kind of proof of work blockchain, you have a bunch of miners that are working to, find the next block, which grants them coins, which is pre-programmed to decrease every 4 years, the number of coins they get per block. That's the declining block subsidy, as well as any transaction fees that people are willing to pay to make sure that their transaction is toward the front of the line to get in that block. So eventually, people often ask what happens when all the coins are mined because they assume that miners just kind of go out of business, but that's not the case because there's also transaction fees. And they've been there since the beginning, but in the beginning they were a very small percentage because blocks weren't even full. So once Bitcoin got big enough where it could reliably fill blocks, we started to get a more reliable fee market. But even that does vary considerably, right? So obviously fees earlier this year during the $60,000 bull market were very big compared to what they were during the bear market portion. And so, over time, especially as we get into say the 2030s, the block subsidy will be small enough that the protocol will be more reliant on those fees paying miners. And it's one of those things where this is how adoption can affect security because the bigger Bitcoin gets, while that block size is still tight, means that those blocks are more reliably full. Fees are pretty high in the base chain, and so that can keep security up long term. As long as Bitcoin continues to grow, the answer is that it should be able to sustain itself. It should be able to generate multiple billions of dollars worth of fees per year, and that creates a pretty high hurdle rate for anyone to go after. One of the challenges of a blockchain is that Satoshi created digital scarcity, which is remarkable. And the kind of the one kind of workaround to that is that anyone can copy the entire code base and modify it and then make their own separate blockchain. And so that's not something we can do with precious metals, right? So there's gold, there's silver, there's platinum, there's rhodium, palladium, but there's not really more than that. We can't just make more precious metals. We only have the ones we have. Whereas with blockchains, you could make an unlimited number of them, and that a lot of people view that as threatening Bitcoin's scarcity because there will only be 21 million Bitcoin, but then there's Bitcoin Cash, and there's Ethereum, and then there's Litecoin, and there's dog money, and now there's a bunch of different types of dog money, and so that can diffuse the scarcity, especially because people end up not being able to understand why maybe one unit, one blockchain is better than another in terms of security and moneyness. I could copy Wikipedia, right? You can actually download the data. And the text data is not that big. If you download the pictures, it's bigger, but it's still doable. You can download all of Wikipedia, and I could post Wikipedia on my website. And the question is, would I get anywhere near the traffic that Wikipedia gets? And of course, the answer is no. I wouldn't get anywhere near the traffic they get, and it's because I can copy all the text that's there, but I can't copy the network effect. Specifically, I cannot copy the millions and millions of links around the internet pointing to the real Wikipedia, and I can't copy the active user base of people that are constantly updating Wikipedia. I can't convince the majority of them to come over and update my version instead. So mine would always be this sad, barely visited like shadow. The Lightning Network is another enhanced to the network effect because that takes years to develop. In addition to the development, which is copyable, but the years of liquidity and nodes that make that network very usable, that takes a long time to develop. That's harder to do than a DeFi project or another blockchain. And so Bitcoin now has multiple layers of network effects built on top of it, so the security is higher, the development is more secure, and there's features being built on top of it. Overall, that's what separates Bitcoin from other tokens, and is mainly why we view that one as money, and everything else is like at best an equity or at worst a scam compared to Bitcoin itself. I'm very bullish on Bitcoin, and so that's one of the reasons I like to focus on it both positively and discuss the risks. So because I want people to understand them. I want to understand. I want people to see the difference between Bitcoin and other protocols, what makes Bitcoin unique, and just people can continue to support this.